Okay, so for the people who are watching this in the aftermath, you'll have to go and watch the Wychoff for Newbies Part 2 by Pips of Persia. But for everyone else, I hopefully you guys are getting to the point where you understand how to spot areas of interest on a chart, and how to spot what you think might be Wyckoff playing out. On this GU chart, higher time frame, I got a daily order block. But let's drop down to the 15-minute. All right, let's say you're not a swing trader, or you just don't like watching higher time frame moves. Market falls down, Wyckoff plays out. You can label this if you want to, but the important thing here is that you just recognize that basically you have your preliminary support, automatic rally. The spring would be this last candle down, then the market takes off. The way I learned Wyckoff, or the thing that helped me learn Wyckoff faster, was your area of interest. After a schematic plays out, it's going to be right around these equal highs, right? Once you break those highs, the market is going to pull back and give you an entry. Your job will be to find the entry. All right, that's all you have to do. If you can do that, you will make a lot of money just trading off the Wyckoff schematic. If you look at it up here, the market pushes higher, distributes, reaccumulates, right? Once it reaccumulates, it breaks the high, it pulls back, you're in the money again, right? So if you're patient, and if you can spot your accumulations and your distributions, right? Accumulate means what? Go higher. When do we go higher? We go higher on bullish order blocks. Distribution means go lower. We go lower on bearish order blocks. Higher time frame, you can drop down and you'll see the moves on the lower time frame. If you're a lower time frame trader and you're seeing an accumulation, then maybe that's a clue for a higher time frame, right? That you're going to get an order block on a higher time frame chart. So once you start seeing that, once you start understanding that, now you can set your trades up. All right, you don't have to wait for the market to set your trades up. You can set them up, because once you saw this Wyckoff accumulation, we're going higher. Maybe you could have spotted a 1 hour order block, right? Maybe you could have spotted a 1 hour bullish order block. You could have been in the trade. You could have caught it down here when it pushed higher. Or maybe you caught a 2 or 3 hour order block. That's what these time frames are for. And that's why you're encouraged to use multiple time frames. Because if you don't see it on one time frame, you might see it on a different time frame. So the more studying you do, he said that a lot of people will say they spent countless hours on the charts. That's me. That's how I learn. I still like that method, because testing forward is cool, but if you can go back and identify it, and then you can see where you had other opportunities to enter the trade, that's awesome. I used to think that I wanted to enter the trade on the spring, And, you know, a lot of times that's your greed talking, but you have no idea that you need to enter the trade right here. Look at this big drop. Why would you enter a trade for a buy right here? Allow the schematic to play out, and then you can catch the trade going up. Anybody who's traded JPY pairs lately, can appreciate distribution schematic, accumulation, distribution, accumulation, accumulation. Price pushes up, comes back, taps you in. If you got in right here, your risk to reward will be ridiculous. Ridiculous. At this point, all you got to do is hold the trade. So the market comes up here. Right now, you got the distribution. It's going to come down here and reaccumulate to push higher. The market has to accumulate and distribute in order to push higher, right? It can't just keep going straight up. It's going to have to have a reaccumulation. So when in the video, you might have heard him speak of rally-based rally, right? So a rally-based rally, you know, in the trading term, rally-based, you got a red candle in there, rally. So if you break down the time frames in this 3-candle setting, you're going to have a distribution when it comes up and pulls back. Then you're going to have a reaccumulation where it goes up. If you can ever catch a rally-based rally, if you ever have a pair that's going up and then you have a pullback day, you can go to the lower time frames the next day. Chances are you're going to be able to see an accumulation schematic, and vice versa on the way down. If you have a pair that's crashing, you'll get a rally-based rally in the opposite direction. And if you can catch that green candle, rally, base, this day right here, you could have got in way up here somewhere for this push down. So understanding Wychoff will allow you to follow the market with a level of clarity that you might not have right now. You know, in trading as a new trader, it's going to be foggy for a minute, but the longer that you dive into this stuff, the more clarity you will have. The only problem you will have after your understanding comes is your discipline. Okay, it doesn't matter what we know if we don't do the right thing, right? I don't give a crap if you can quote the speed limit. If you press that accelerator and you go past that speed limit, it doesn't matter that you knew the speed limit was 65. You're going to get that ticket. And in this case, the ticket is always too expensive, right? We're not rich, so we don't have the luxury of just blowing thousands of dollars, right? Most of us can afford to fund our own account, or we can afford it. We don't have the patience, right? Because most of us can put a couple of $100 in an account or $100 in an account and grow it slowly. But we don't have the patience to grow it slowly, which is why we're speeding in the first place. So what most of us do is go buy a funded account, which is awesome. But if you speed, right? If you don't allow the trade to develop, or if you risk too much on the trade, you're going to blow your account. So what I'm trying to help you understand is, even though you understand that this is a rally-based rally, you still have to wait and allow the market to play out. You know, you have to enter after the schematic plays out, right? Don't try to enter on the spring, because you don't know it's the spring. enter after the schematic plays out. I would suggest that everybody print out their schematics, have them by your computer, right? When you do your analysis, look at them every now and then. Look at it on a chart. Maybe you recognize something on that chart that lets you know that this is a schematic either playing out or about to play out. Do I have any questions over Wychoff? None whatsoever.
I have a question.
Yes, ma'am.
The pair you did before, I think it was cat chef or something, right? Where you showed us,
Chef
yeah,
James.
okay. Where you were showing on the 15-minute your point of entry. I think it was.
I don't know exactly where I was.
Was the
I think it was
15 minute.
GU.
And you were saying, yeah, I think that's what it was. If you could scroll to the left a little bit. Yeah, you were saying like if you can find the point of entry, like that red zone that you have.
Up here?
Mhm.
Uh-huh.
That's like you marked it up because of the imbalance, or that's your, I mean, I wasn't sure.
Yeah. This is marking. It has nothing to do with Wyckoff on
Okay.
this schematic. This is something that I'm looking at for maybe a future pullback. If I was marking this off, so marking this up solely off Wyckoff, I would have been interested in this imbalance, right? Price pushes up, it comes back, it fills the imbalance, and then you're good to go. So the way that a lot of
So
people,
balance is your point of interest, and that's where you would want to be tapped in.
well, on this particular schematic, yes. So it's going to depend on how the candle's set up, right? So price comes right back to this imbalance because it needed to be mitigated, right? So that's why this would be your point of interest. Much like this is 12-hour. I wish I wrote this down. Okay, I think this was a 4-hour rally, base rally, maybe. Yeah. Okay, you see how it's a rally, base rally, and it taps right back in?
Okay, so
So
the second rally is the tap in.
right. I don't want to, it is to tap in, but the more important thing is if you drop down, let me see if I can just drop down to a lower time frame so you can see it. I'm going to pull this up. Okay, so you see how the Wychoff plays out right here? This would be your spring.
Mhm.
The market pushes up. We don't break these highs yet. As soon as the market breaks these highs, now your zone is activated, right? Price pushes out of your zone. Then it comes back and taps right in. You see that?
Yes.
Now, this is hard to see on the 5 minute. Easy to see on the 4 hour. Right?
Yeah.
Now, here's the thing. You have a rally, you have the base, right? You can't look at this. You can't wait until this candle forms on the 4 hour, right? Or the move is passed. You have to drop down as this candle is forming in order to be able to see your entry point on this 5 minute chart. Does that make sense?
I don't know.
So your entry point on that 5 minute chart is going to appear as that 4 hour candle is developing on the 4 hour chart.
But wouldn't it be the second candle that just taps in?
Yes,
This one, the other one.
no, it's not this candle, it's this candle.
No, I mean the next one.
No, this is on a high, this is a 4 hour. This, if you miss the move down here, you would have caught it on this 4 hour.
Right, which is
So here's the difference. If you take this trade off this 4 hour tap in,
Mhm.
let's say you protected the entire candle with the wicks, you have a 23 pip stop loss, right? You see that?
yeah.
If you take this trade on the 5 minute, what is that, a 6.5 pip stop loss?
Mhm.
A little bit different. So if you're risking 1% of $100, 100 divided by 23 is what? For easy math, about $4 bucks. What's 100 divided by 6?
16.6 something.
So it's a difference between a $16 lot size and a $4 lot size. It's a big difference if it goes 100 pips. You make 400 on one trade, and you make 4 times that amount, 1,600 on the other trade.
Okay.
So that's why you want to be able to recognize the schematic plan, and then you'll know the drop down time frames to go and look for. In fairness to you guys, we don't even talk about this, right? The only thing we ever talk about is finding a trade on a daily and taking the trade off the daily. This is called relatively safe trading. Like it's very little risk involved when you trade off the daily, right? Only risk you have is
Stop
just,
loss.
that it runs through your daily time frame. On the lower levels, there are a lot more risk because you can get caught in a retracement. Those order blocks don't stand up as much as a higher time frame order block, which is why you want to use multiple forms of confirmation when you're trading on those lower time frames, right? It starts with an idea, right? The market bounces from a spot or a point of interest that you've identified, right? You get that pullback, right? You get the breaker structure, you get the pullback, then you expect the market to go higher. Now you can drop down, and as the market starts to push higher, you're able to get a great entry on a very low time frame because your confirmations have been met. Do you guys understand the concept? I don't want to confuse the masses here.
Well, I understand it. I mean, I think, I don't, it's kind of like learning how to do, surgery. You're going to understand what needs to be done, in your brain, but then you actually got to go cut somebody and fix something. And that's going to take a few times to get right and to get comfortable with. So, I just look at it as a process, but there has to be a way to get, I guess, the reps, and I guess that would probably come in a demo. It's probably the best way to.
Or you don't even have to trade it. You have to identify it and mark it up, right? If you mark it up on your charts and then you come back to it a couple of days later and it plays out, then that's going to be confirmation. And that's kind of what he means when he's talking about trading, like don't go in the past. He's saying look in the future. So it's not hard to find. If you look at this USD JPY chart, you had a rally. This is a base, right? This is a pullback. Rally. We got the pullback. What do we expect? We expect for price to turn around and go back up. With that in mind, it's a great opportunity to drop down and start watching for what you believe is Wychoff playing out, right? And once you see the Wychoff playing out and you get a schematic playing out, then you can find you an entry when it pulls back, taps in and goes up. There's nothing overly difficult about what we're talking about. So let's explain something on a larger level, right? Let's say I was breaking this chart down, and this is just a move straight to the top, right? My first tool that I use is my Fibonacci. I want to measure this market's move from here to here, and then it's pullback. Very shallow pullback and pullback 38%.
Would you consider that the base? Or just really is the base different from a pullback?
Any pullback is a base. So yeah.
Okay.
So let's look at this second leg. Rally, base, right? Rally. Again, shallow pullback. This last leg right here. This pullback damn near hits my zone. So I can look at this, let me ask you, what is this telling you? What can you deduct? What have you deducted so far? Hopefully, you're deducting that this push up is losing some steam, right? From here to here, there's one pullback, two pullbacks. Then you get a 3 candle pullback. Then you get this huge run up. You get one candle, two candles over here. Then you get 2 candles, and then you get a bigger pullback. So just by looking at this, you should say, okay, this rally is losing steam, right? It's another reason why I have the 9 and the 13 moving average, because I want to see price pull back to my moving average and give me a sign that it's turning to go back up, right? As long as this market is riding the 9 and the 13, I'm going to buy it right when it pulls back to my area of interest, my point of interest, right along that line. That's what I'm going to look to do. So by this pulling back right at the 50% mark, I'm biased for this thing to buy, right? I don't have to wait for the daily to give me a green candle, right? What I want to do is drop down here on the lower time frame and watch for a schematic to play out, right? And maybe I don't see it on the 15-minute. Maybe I see it on the 1 hour, right? Maybe I see it playing out on the 1 hour, or maybe I see it playing out on the 2 hour. The point is, once you see it, whatever time frame that you see it playing out on, you can start to look for an entry once it plays out, right? Does that make sense? Because your overall bias is for this thing to turn around and push to the top side. My first clue here is it's going to break this 9 and 13 to the top side. That would be my first clue. That don't mean I'm jumping in trade, right? Because a schematic is going to go back and forth. Y'all are quiet. So let's look at it on the 15-minute. Market comes up.
When would you get into the trade? I guess. I mean,
well,
so I mean, what are the relative highs that need to break on these lower time frames to give you the confirmation? I guess my question.
That's the whole point. We got to wait for the schematic to play out. Let me see if I can pull up a Wychoff schematic. So once these points play out, right, you're gonna see these relative highs across here. We don't have that yet. We have to wait until we get 2 or 3 of these highs across the top before we can even consider an entry point, right? Right now, there's nothing. Market has came down. I think it's kind of bottomed out here, right? Maybe it'll go a little, but maybe this will be the rest of the schematic playing out. But I think this is probably the first significant bounce, you know, and what aids me in my belief of that is price actually crossed over the moving average, right? Now, you can say the same thing right here, but we kept pushing lower, right? In this case, it looks like we're rounding out down here at the bottom. So the first clue for me is a higher low on the 15-minute, right? Maybe it'll push up, then it'll push back down further, right? But you will see at some point, maybe price breaks this level and it'll be rounded out. Once price breaks this level, then maybe this will be your level of relative equal highs. But you have to allow the schematic to play out. It's premature for me to say this is the exact level, right? But if it plays out that way, you will be able to see it distinctly because you're going to see other highs right around the same level. Then the price is going to break out of that. And it's going to pull right back to that level. Maybe there's an imbalance. Maybe there's an order block that it needs to fill. It's going to come right back. and that's your entry. Now you will enter on the 15-minute. Then at the end of the day on the call, we're going to have a daily order block. You'll already be in the trade down here somewhere. Does that make sense?
It does to me. A working man like myself will likely miss the.
Well, yeah, you know, if you have a day job or something else, you might miss it. But the point is to identify. I mean, everybody on this call might miss the actual entry. But if you understand what you're looking for, right? Then you can just test it out. Like you can see if you can actually see it. The first thing you have to do is be able to see it. If you can't see it, then you'll never be able to trade it. But eventually you'll be able to see it. Let's say tomorrow this pushes down further, and this is not going to be your Wychoff level playing out. Then you have to look for a different level, right? Maybe your level changes to down here and it starts playing out. The point is you want to be able to drop down and see the level that the Wychoff is playing off in, and then you can come up with an entry point after the schematic. You're not supposed to enter the trade while the schematic is playing out. That's the important takeaway. You should only enter the trade after the Wychoff schematic plays out. I think gold had let me see gold. Okay. So if you look at this day chart, I'm going to be able to drop down. That's too far down. Okay, let's look at this 8-hour joint. All right, price comes down. You get a Wychoff playing out. Looks like you had two different schematics to play it out right here. Looks like you had a accumulation, comes back and reaccumulates. Then the price gets up out of Dodge. Your relative equal highs in this schematic would be right across here. Maybe there was an entry on that. Oh, I'm not going to be able to do it like this. They're a little lower. Okay. So if you see your schematic playing out, right? I would call this two schematics back to back. This is a better depiction of a normal schematic. So you see how you have what looks to me like a trend line. Y'all see that? Right into your spring, and then you break out of that trend line. Are y'all tracking it?
Yeah.
So in the past, I used to be like, man, I want to catch a trade right here as it breaks the trend line, right? But price comes right up, it breaks the trend line, but it pulls back to this level of equal highs, right? See this level of highs right here?
Yeah.
Mhm.
It pulls back not once, not twice, but 3 times before you get this explosive move. Now, on this is a 1 hour chart, right? The schematic we caught was on the 8 hour, it was an 8 hour schematic. But when you drop down to the 1 hour chart, you see this move. If you drop down to the 15-minute, it's probably several entry points right here. But it's right at your level of equal highs. And it's after you get the explosive break of this trend line. Look at that candle right there. Now, we've seen this a number of times because, I mean, we might not have called it Wychoff, but you've seen a breakout. It pulls right back to your golden zone, right? And it pushes higher. Now, if you understood Wychoff, your entry was right here. You got this first move. Now it pulls back to your golden zone, which is where? Oh, by the way, the same freaking spot. And you got this move. You see that?
Mhm.
So it provided you with 1, 2 trades. If you had stayed in this trade, you could have got, I mean, the entire move all the way up, right? On a larger scale, whenever you see an accumulation schematic playing out, right? This is just a reaccumulation. But if you were bullish on gold, and you know, we'd have had to combine other market conditions, right? We would have seen the order blocks lining up to keep going. We could have just held that position. Or if you're not a holder, you know, like if you don't swing, you know, like I do, there would have been other confirmations that would have told you that you were in good shape. For one, the pullback to the golden zone, right? Then the market goes up and it pulls back again. So if you put a fib on this move, probably pull back to the 78.6. But everything on this chart after that Wychoff played out, it lines up to tell you, hey, I'm going higher, 78.6. Boom. The explosive move. So if you can identify your schematics, you know, schematics will help you. They will help confirm your direction. They'll help confirm, you know, what the hell is going on. Don't just say this is consolidation. You know, I mean, it's not just consolidation. It's a schematic plan out, and it gives you your move. And it sets you up for this huge move right here, right? So once you understand what you're looking at and what you're looking for, it adds to the confirmation of your trade idea, right? Of your market analysis. So when things start playing out, you're not surprised and wondering what's going on.
So I was wondering what's going on after my trade with, wait a second. I think it was CAD Chef on Friday. Turned around on me. Was it
Were
CAD
you
Chef?
buying? Were you buying it?
Yes.
Where are you
Yeah.
buying? Where are you buying it to?
Where to?
Yeah, where are you buying it to? Did you frame it?
1 second, I'm pulling up my chart. Yes, I framed it. Well, I had TPs. Well, okay, so my long position was set for 0.75602 up to 0. At least 77,000. I don't even know. To read that number.
I'm trying to frame this real fast. I'm trying to see where you could have possibly been trying to take this. It was an SMA order block. I think that's your OB right there.
Yeah.
Did you have that OB marked up?
Let me see. Yes, I think that's the one I had.
So you saw it tap?
What do you mean?
Did you see price tap into it?
Price didn't tap into it yet. Not from what I marked up. I was in profit, but it went back down on me.
Maybe you're a couple of pips away. But tell me what's going on. Somebody tell me what's going on with this trade.
Yes, please, because I need help.
Well, I mean, are you still in the trade?
It kicked me out.
Did you get
I
in?
moved my stop loss into profit. I think it was like 25 bucks in profit.
Did you get in for the sale?
No,
Why
because
not?
I feel that it's gonna go up.
You think it's going up?
I can't really see yours. Well, okay. But I think
Okay.
it tapped into a bearish order block on the upside of your trade. And that's why it turned around and started going down. And this is a
Yeah.
monthly
Yeah.
bearish order block, so it carries a lot of weight.
I see that.
Mines is a monthly order block.
Mm-hmm.
So you're definitely in that monthly order block. This trade is going to sell, man. Like, it's going to sell huge. So what do we say about price that wicks past daily highs? When's the last time price was up here? Look at the highs that it just took out.
It's taking out liquidity, so you're going to get a stop
Yeah.
run the other way.
It stopped run, man. This thing's going to sell like a mofo.
That run. Okay.
So now
And-
the run is going to be on all those lows. Now it won't happen tomorrow, but this thing is gonna start pushing down, buddy. Got relative equal highs. It took out these highs. Yeah, this thing is gonna start pushing. It's gonna push down, and then it's gonna pull back, probably 78.6, and then it's gonna push down hard.
Okay. Thank you.
So you should be able to see something like this. You see what happened right here?
Mm-hmm.
See how they wick past this high? You see what happened next?
Yes.
Took out all the liquidity. So that's what I anticipate that you'll see on Cash App.
Hey, keep that last chart that you had up, showing showing that stop run. Yeah, I guess that's what it was. Keep that chart in mind, because after you get finished, I got a question for you in reference to that video yesterday.
Okay. I got some
So
for you too. But go ahead. What would you say, Alfie?
I was just wondering, and I meant to ask this earlier, when, like, how do you apply the Wychoff while you're actually trading the higher time frames?
Well, Wyckoff plays out on every level.
Yeah, let me see. How do you see that?
How do you see it on a daily?
How do you use it?
So you don't see this Wyckoff playing out, and it pulls back and pushes down.
Not really.
You said not really. So
Mhm.
you don't see any distribution schematics.
Okay, well now I like some higher, I mean, some of the equal highs and
So for the first step, I think that everybody has to do, I think you have to go and you need to print off your schematics, right? And maybe you want to go back and label it, after the fact, like up thrust after distribution. Some of them only have an up thrust. They won't have an up thrust after distribution. Sign of strength, sign of weakness. Once you get them printed off, you can go and you can look, right? A lot of the moves are so ridiculously clear that it's ridiculous. Like this is perfect Wyckoff playing out. Perfect. Right? And after the market clears, these relative equal lows right here, it pulls right back. Ding, ding. It pushes down. Perfect Wyckoff. It's just going to get it's going to take you a little time to get used to seeing. What I'll start doing is, whenever I see it on the charts on the different time frames, I'll have to start like screenshotting it, and I'll have to send it to you. I'll send it to you on WhatsApp, since it's easier just to photos to shoot a photo on it.
Okay, thank you. But before you actually take a trade, let's say whatever trade you want to take for this coming week, you are not only looking at your higher time frame order blocks, you also look out for whatever Wychoff you see up until which
So
time.
I don't think it's that literal, Elfie. I think that you know, it's kind of like when you're speaking English, right? Do you think about the conjugation of verbs, or you just do it?
Actually, I have to think about it.
Well, yeah, you might be, but if you were speaking German, you would just do it, right? If you were speaking German, you just speak it.
Right.
So it's the same. Like initially, you probably look for all that,
Mhm.
but
Eventually, you'll
once,
just,
yeah, eventually you don't look at all that. So let me give you an example. On this particular trade, not once did I mention, oh, Wychoff is playing. This is up. That's after distribution. No, I didn't do that. What I said was, conceptually, we just had a stop run, right? This is a stop run. The concept is the market is going to collapse after your stop run. Now, after the fact, you look, oh, yeah, that's perfect Wychoff plays out right there, right? And that's awesome. But if you were a person who recognized Wychoff, you wouldn't have panicked because you missed the trade from up here, right? Because you know at this area of equal lows, relative equal lows, the market is going to pull back and let you in. And it pulled right back. It pulled back here to let you in, and it pulled back here to let you in. Either one of these two trades paid you more than if you had got in here, because here you didn't have a clue it was going to shoot down.
Mhm.
But here you knew that this is your area. This is the area you're looking at for an entry. And you get 1, 2, 3 opportunities.
Okay.
Does that make sense? This is why understanding Wychoff helps you, because these entries may not have been available if you didn't understand what you were looking for.
Mhm. Okay.
But thank you for showing me a cash. Yeah.
Thank you for showing me too. That definitely wasn't on my list of opportunities.
Thank you for clarifying, because I was thinking it was gonna go, I don't know why, but now I get it. Okay. So thank you too.
Anybody else want to show me some $1 million opportunities? Rhonda, Sean, are you back trading, Sean? Essence, you always had some funky care.
Hey Todd, can you look at Euro JPY?
Euro JPY. What were you looking for here?
And that it would sell?
Yeah, I think it will sell. What makes you think it'll sell?
What makes it? Let me consider it.
Huh?
in like a trend line here, liquidity.
A trend line, because it has a trend line.
Yeah.
Well, that's cool, but I want you to think of it differently. Price is going up. It pulls back. You're good. Structure is intact, right?
Okay.
This pullback, structure is not intact. It broke your low, right? You see that?
Yeah.
So you could have had this low, it's broken. This low, it's broken. So really, this pullback was the first time it crossed your moving averages. So that might have gave you a little clue, but I want you to don't worry about the moving averages so much. Look at the structure. So at this point, I'm going to say it's going to sell. So now my interest is the market went from here to here. It pulled back to my golden zone. So I would expect for this thing to push down. But how far down do you think it's going to push? This is the golden zone from this whole move. So this would probably
Zip it.
this would probably be my my pullback point of emphasis or area, you know, that I would want to see it pull back to. It doesn't mean that it's going to pull back right now, but like even this order block is a sell order block. So I think it'll start selling. When you sell it from here, you got to take profit here. Then you got to take profit again here, here, and then maybe to your pullback zone. What's up, Sean?
So why you didn't use the Fibonacci extension?
Wow. Look at that. That's 500 some pips.
What you mean? Why? I mean, is there a difference between using it and using the fib?
I mean, I just don't want to confuse people.
Well, they don't have to use the extension.
Yeah, because
I'm just curious as to will the extension put you in that same point of interest area?
This is the extension. Fibonacci extension. I'm gonna take it from here to here.
Oh, you don't pull back to the A?
I followed the market from here to here. You pull back to right here. So that
well, J pulls back to the A. So I don't know
you
really
pull
what
back to the what?
To the A, the point where you started, the top of the market in this case.
No, you put it from where the market went to where it pulled back to.
Okay, after we're done, we'll pull up a video and I'll show you what I'm talking about.
I know what he did. I think you got it confused.
Well, we pull it up. I mean, no need to, I don't want to bog this down.
So
we'll do it later.
It made it to your first take profit. This is all his take profits. Now, some of them line up, which is cool. I guess these line up pretty decently. This one doesn't. This is way down here. There's an order block right here. But he's saying that maybe this is
I
the
bet if you pulled it back to the A, it would line up down there perfectly.
if I put it back here.
Yeah.
Maybe, but why would you pull it back there?
Well, again, I don't know. I'm not an expert on the extension tool. That's just how he said he uses it. You can do it the way you did it, but he does it this way. So again, I haven't done enough research to, say you're wrong or he's right or anything like that. But
Yeah,
that's how he does it.
he's wrong. He's pulling it back to the A. Any other questions? Comments? Are y'all ready to seize the day? Y'all ready to catch these pips? Pips pay my bills. Pips pay my
I have a question. Can we go back to CAD Chef, please?
Sure. You're mad because it's selling?
No, I'm not mad because it's selling. I just want to get an understanding. And I'm wondering, is this the one that we thought that was going to fill the imbalance the other day?
I haven't talked about cash yet.
No, it was on the 5 o'clock. It was on the 5 o'clock call. But anyway. So
Lena, do you believe this is gonna sell now? Now that you see this bearish order block lineup? Do you believe?
yeah, I do now.
Should have been a stop run suspect anyway.
Yeah, I like, you don't see that wicking all these highs. I mean, if it wicks past highs that was created like in the 80s, that's a pretty good clip. This high right here is October 19th, man. I mean, you ain't got to show me nothing else. The thing is,
I mean, I understand what you're saying. So even if there wasn't an order block, like on the daily, there isn't an order block, which is cool. So my question would be, I would just follow the method of going down on a time frame to find my entry, basically.
well, Selena, I just want you to understand concepts.
Right.
In this trade right here, we saw this live, and we said the same thing. There's no order block.
Right.
We saw this live. We darn sure saw this live. I showed y'all this the same day. Remember that?
Yeah, I remember.
We caught this live.
Yeah, there's no order block. Remember, there was no order block this day.
Right. I remember there was no order block on.
Same thing. It's the same situation for Cash Chef.
That's what I'm saying. I just want to make sure, because I got ate up really bad on the other one.
Well, listen, I mean, you got to have a short memory, and you got to you're gonna get eaten up. I mean, when when people go and try to sing, and they stand in front of people for the first time and they sing and it don't sound good, it's because they don't practice, right? They haven't practiced. They're not confident, right?
Right.
So it's the same, man. Trading takes practice. But
no, I wasn't saying it that way. I was just saying I wanted to make sure that when I do this, when I do better. That's all I'm saying.
So what's the concept of stop runs?
Taking liquidity, was sitting above price.
So what's supposed to happen after that?
Supposed to sell off.
So if you understand the concept, now you need to look for a reason to enter for the sale, right? Here's your
right.
Now this sale should break structure, right?
Right.
So that's, if I take this sale, I should expect then I'm going to break structure. Maybe this one, maybe I'll get to this level before it bounces, right? If I break structure here, there's a chance that it pulls back, you know, to an imbalance or whatever on this candle. If there's one that's left, then it'll push down further. But the concept is, since we've stolen the liquidity from the top of the market, now all the liquidity rests below these lows. So that's where this market is going to push to. At the very least, I'm shooting for this area. Any other questions? So everybody's gonna be a millionaire this week. Qualify them accounts.
Oh, hold on.
Yeah.
One last pair, please.
Huh?
One last pair, please.
Yes, ma'am.
I saw, I don't even know if he ever been on a call, Gold Rush, call out EU NZD. I think it was EU NZD. Wait.
Euro NZD.
Mm-hmm.
What did he say?
So.
He said sell.
Mm-hmm.
What do you think?
I think it's gonna pull back, fill that imbalance. Well, it's almost done thinking. I mean, probably.
See this Wychoff on this weekly?
I'm sorry.
Did the Wychoff play out?
You asked me whether it played out.
I'm saying if you, I'm asking you, you see the Wychoff right here.
I don't see Wyckoff. I don't like Wyckoff.
What do you mean you don't see it? Are you serious? PS? Automatic rally? Spring?
Okay, I see the spring taking out liquidity. I think that's all I see. Take
Okay.
out liquidity.
Hey, that's a start. That's a start. Now, Gold Rush said it's gonna sell.
Yes, I think that's what he said.
Something. This
He
is
or she.
okay. So let's talk about this.
Check why he actually posted this. Yeah, David yesterday.
I believe it'll go up first, and then maybe it'll sell. Maybe you're getting a bearish order block, sell candle, and another bearish order block. I would agree with that. But on the monthly, this is a new month, right?
Mm-hmm.
What is that pullback that it's already had? 50%?
On the monthly,
Yeah.
it's
Looks
gotta
like
be,
at least
gotta
6,
be
probably
putting it-
618. Yeah.
I don't think it's a 61, but I mean,
Well, if you do, well, maybe not. Well, it might be if not the entire move. I was just talking about the 1 monthly candle.
well,
The
you
the
can't,
March candle.
but you have to take this. I mean, look at the pullback. There's no pullback.
Okay, I guess I'm kind of late right now.
What do you mean there is no pullback?
From this
That
candle
green-
right here, there's relatively no pullback.
No. I'm saying the way I would have done it is
One candle.
the March candle.
I know, but what I'm telling you is you have to do both candles because there was no pullback on this first one. Yeah, it's a 50% pullback from this month candle. But what about this candle? Did it never?
So, well, I mean, again, I would look. You can do the whole move. It's probably a 38% pullback at this point if you count the both red candles, which means it probably still has more room to pull back.
Yeah, I think the market needs to come to this area at least.
Yeah, well, I just looked at I'm checking the chart, right? Checking the picture that he posted, which is on a 15-minute time frame, and it was on April 28th. So I guess, I'm sorry, you
So
can let that one go
it's gonna say, you see this Wychoff right here?
again.
Yeah, it's just, if you drop down to a lower time frame, you're gonna see Wychoff right here. There's a spring right here.
Okay. But it's already been tapped into.
Well, yeah, but the first step is you gotta see it though, right?
Okay. But wouldn't that spring also be a, can you go back, please?
It's right here.
Like a low?
No?
You were just on the daily, right?
Yeah.
And that spring on the daily is also a swing low, isn't it?
Yeah.
Okay.
I think this is going up in the immediate
You said
future.
what?
It's probably gonna continue to go up in
It is.
immediate.
It is. I mean,
Uh,
he might get a pullback with it go up, but if he's talking about the 15-minute chart, then yeah, of course, it'll pull back.
But it's already done. Sure.
Yeah.
Yeah, a lot of it depends on what they're talking about, because there's so many people that trade different
Yeah.
windows of time. So it's
Look, so I believe it's gonna sell. He's right.
So, but if you go to a candle that says April 28th, right? 29.
April 28th.
So I think he meant that red candle. Is that still the 29th? I mean, the 28th?
Yeah, this is 28th right here.
And the next one, because you're on the 6 hour.
So yeah,
Yeah, I think he meant that candle.
yeah, maybe.
I mean, and in this case, honestly, on the 6 hour, I don't know, it might be a little mini stop run opportunity also.
And no stop run on 6 hour, not to the high side.
Well, to the low side, I mean, it's approaching, an equal high area, so maybe.
Oh, you mean like pulling back?
Yeah.
Yeah, but I wouldn't even chase those opportunities.
Well, I'm not saying I would either. I'm just,
It's gonna pull back to the order block, like on the 8 hour. We know it's gonna pull back, but the concept behind a daily stop run or a classic stop run is price is gonna wick. You're gonna have a wick as that area.
Okay, thank you.
But of course, anyone else? Anyone? Essence, did you have something? Did you have a pair?
No, I don't.
Why not?
I mean, I have a pair that I want to trade, but I don't have a pair that I want you to look at, I guess.
What pair are you trading, Essence?
I was thinking about, I think it was AN or AC. I think it was one of those two.
Always something that don't move.
Oh my gosh, it works for me. Right? Let them know.
Oh, that's actually enough.
So Todd, looking at this pair, and I'm trying to, because Wyckoff, it just, I don't know, it don't play out well in my head. But if I'm looking at this is a distribution, and then where you got the breaker structure, that's your, or am I making it too many candles to?
Oh, you said where I got my breaking structures, what?
That's the, I don't know the exact term it's called. That's the first test, basically,
It's not
or
a
the
weakness.
huh?
The sign of weakness, yeah.
Yeah, the sign of weakness. And then up where all the wicks are,
You got an up thrust.
there you go.
And then maybe that green candle is the up thrust after distribution.
Which green candle? The
Only green one up there with the wick.
Oh, okay. Okay, I'm tracking. I'm with you now. All right. And so
So what are your expectations at when you see a distribution schematic?
yes.
Somebody, who said that? Who said that?
I did.
Oh, yeah, so you can catch you a little sell. I mean, it's supported by your break of structure. Maybe a sell down there to where I have the volume. Do you have your chart marked up like this, Essence?
No, I mean, in a way, I have to look at it to see if I have it like exactly like this. But no, I was just thinking that it was gonna sell because like it had like it's like little swing highs going on. And so I was like, okay, maybe it go down. And it had a shooting star on the daily. So I was just like, okay, like, maybe.
What about the order block?
I don't think I saw order block on the 4-hour. But then again, I don't think I went down that far.
You're back to trading the 4-hour.
Oh no, I just haven't paid my monthly fee so I can use the 8-hour. So I have to use the 4-hour until I pay.
Oh, okay. But 12-hour has an order block on it.
So you
Essence,
think it's gonna
Essence.
sell? Yes.
I'm gonna tell you like they told me when I was in the Army. It's expensive being a professional.
Yes, it is. Yeah, I'm gonna get it together though. It's only been a couple of days. I mean, a couple of days since I haven't had it.
So here's your order block. You can take this trade right here.
You think it's gonna pass that first order block? The one that's like
I do.
that you passed it?
I think.
Okay. Why?
Didn't it break your load right there?
My lows right where?
On the
Where that
chart.
line is. See this black line?
You don't see that, Essence?
Yeah, I see it. But like still, like wouldn't it still have like to test it to see if it wants to even go down there? Like, or you think it's just gonna like push right down it?
Yeah, I think it's gonna push that.
Oh, okay. I was just gonna take my profit right there because
Well,
yeah.
hey, there's nothing wrong with taking profit.
I don't blame you. I'll take mine
And
like
then
that.
probably like get back in the trade if it makes another order block. But yeah, I didn't know it was gonna go down that far. I didn't think it was.
So since it's been the first week of the month in NFP, how do we, when we trade this first week, is there any extra precaution or anything we should take, or
No,
just,
I don't think so. Look at the news.
Use a 0.01 lot size.
I don't agree with that either. I think that you should trade normally. Maybe Friday, before NFP comes out, you're not in a trade, but it's going to come out early Friday morning. The numbers come out early Friday morning.
Oh, it's Friday.
yeah, it's the first Friday of the month.
That's
May
nothing
30th.
to do with anything that you're doing now, though.
Now, does NFP actually only, is that in regards only to US pairs? Yes, right?
No,
USD pairs,
all of them move crazy.
everyone, okay. Yeah.
Yeah, I believe the order blocks are going to set you up in the right direction. I think we should respect NFP, but don't fear it.
Okay.
Are you running the other call?
Who are you talking to?
I'm asking you.
Am I running the
This
11 o'clock call? The swing trade call?
one? Yeah.
I mean, I can.
Hey, either you or Felicia, because Felicia talking about look at EA.
Yeah, let Felicia do it because I do more of the.
Yeah. Let's see. We're gonna check for understanding. Conversation. I gotta
Oh, she got to get on the road. I mean, I'll do it. I need more practice. I don't care.
Hey,
I can do it.
you know what? Felicia always on the road.
Hey. She take that same
Hi,
route
cut
we
it
used to
out.
take.
I didn't take my son back in a couple,
Yep.
so. But I'm here for now, so I mean,
Well, they try.
whoa, why?
What?
I'm gonna pull it up. Let's see.
Come on, superstar.
No, let's not. It's a lot of